June 18th, micro crude oil futures. It's a 1 minute chart. I thought I'd make a follow-up video on a 5-wave move down, failed waves, poor structure, and ATR, ADR. The wave process, you can watch my previous video. It's basically just a succession of waves within a move, and it consists of candle under candle and candle over candle. So I won't spend a lot of time going into the technical details on that today. I'm going to cover these. So let's get started. So I'm going to go ahead and zoom in here a little bit. So this first 1 minute candle where crude oil opens up in the US day session, and price is just kind of going sideways, and I can't tell you at this point if price is going up or down. However, we know that price is now going down when we get candle under candle. So to find our highest candle point, you use the highest smallest candle body for the high and the smallest lowest candle body for the low. You don't use tails or wicks. So in Thinkorswim, you actually have the ability to turn those off. I'll show you how to do that. You can go to Appearance, tab, and click on Uncheck Show Wicks. Click OK, and that removes the tails and the wicks. So I'll leave those off for this video. So our highest smallest body candle is right here. So I'm calling this the wave 1 high. You could use this one. Frankly, it doesn't really matter. You could use either one of these three. And then price goes down. We know price is no longer going up when we get candle body under candle body. Then price continues to move down. How do we know this is the bottom? We don't know this is the bottom of this wave until we get candle body over candle body. So this right here, this candle body is over this candle body. So now we know price is no longer going down, price is going up, and we just basically wait for a top to form, and then we wait for the next condition of candle body under candle body. So here we get candle body under candle body. So now we know that this is the beginning of wave 2, and price should continue to move down. We shouldn't expect any closes above the wave 2 body. Now you may get a wick above, so I'll turn wicks back on to show you there actually was a wick here above this, but the close of that candle is below the wave 2 body high. Now, had you shorted here, right, and you put your stop 1 penny above, 1 tick above, yes, you would have gotten stopped out, but you could get right back in as soon as you see that price is closing below the wave 2. So in order for what we need to see is we need to see wave 2 printing bodies, like a close below this, and then we need to see bodies printing below wave 1 to be a wave 2 continuation. So here, this body opens here, but it's intersecting wave 1, but it does close below. So this is a good sign that finally we're getting the push down into wave 2, and price goes down, down, down. And we're just looking for where we find the condition of candle body over candle body. So I'm going to zoom in on this. Right here, this candle body is above this candle body. So this candle body closes at 73.15. This one opens at 73.16. So that's a 1 penny gap. Very hard to see on a chart if you're zoomed out. That's why I have the script I showed you in my previous video, but I've zoomed in here so you can probably see it on my video, or you can check it on your chart. So at this point, we know that that is the wave 2 bottom because we get candle body over candle body. So price is no longer going down, it's starting to go back up. And yes, you do see a close below this, and you see a tail below this. So had you gotten long here, you would have gotten stopped out right there. But I wouldn't have gotten long here because you're expecting a 5-wave move. So price then proceeds to go up, and then we get this candle body under this candle body. So that technically that is the wave 3. I'm just going to move this over a little bit. However, I've turned it red because what happens is that this price comes down, goes back up, goes candle body over candle body, and we actually get this candle body over here, which is completely above this this wave 3. So that's why I've turned this one red and this one red, because it's both are failures, because we get a higher candle body on this wave 3, and price didn't continue to retrace and go down below wave 2. But here on this wave 3, we get the continuation. So we need to see candle bodies closing below, printing below wave 2 and closing below wave 2. So here we get to close, here we get to print below that candle body. We get another one which is also completely below this blue candle body. So I've marked that as the wave 3 termination. Why? Because on this candle body here, it's above this candle body, so it meets the condition of candle body over candle body. So we now know price is no longer going down, price goes up. On this wave 4, I don't know that this is the wave 4 end until I see this candle body, which is candle body under the wave 4 candle body. We need to see price closing below the wave 3 candle body. So we get the close below, but the open is still intersecting, so that's not the bottom. Here we get the candle body completely under the wave 3 candle body, and then price goes up. So here we have candle body over candle body. That meets the condition of the wave termination. This is wave 4 bottom. Then we get into a succession of failures. So here's the candle body that went up above wave 4, so that's good for wave 5. And then we get candle body under candle body, so it looks good. Price, we would expect price to continue back down and at least wick below this. But that doesn't happen. So price then goes up. Okay, fine, it's not a problem yet because the wave 5 high is here. And price comes back down. So this is all looking good. The price is going to continue lower. And then we get a reversal and price starts going up. So at this point, this price closed above this wave high that I had marked previously. So now I've colored this red because you can see it's a failure, which makes this a failure, which makes this a failure. And then here this candle body prints underneath this hammer doji candle body, and so that wave 5 is also a failure because price then goes back above that and continues going up. Only here do we get once again candle body under candle body, so this actually becomes the wave 5 top, and then price continues to move down. I'm going to zoom out a little bit. So here's that wave 5, and you can see it coming down. Essentially, all of this section is here is an internal consolidation. Yes, you see candle body here, and then you see successive candle bodies above. Those don't matter because they're all still within this wave 4 bottom to wave 5 top. So we have to see candle bodies at least printing wicks below this on a wave 5 or bodies. You have to be very careful that you don't go for body closes because it can just be a tail or a wick at times. In this particular case, price does come down and here it prints the close below wave 4 with a long tail, and then we actually do get this yellow candle body here. It opens here, closes there, and that's a full candle body under, and then price starts to reverse. So there's your wave 5 move. So let me go back, zoom out. So we covered the 5-wave move. We covered failed waves. Let's talk about poor structure. Poor structure, zoom back in. Poor structure for me is where you cannot connect 4 candle bodies. So I'll draw some rectangles for poor structure. So zoom in a little bit more. So from the bottom of this body to the top of this, I cannot connect 4 candle bodies. You see it right there? We can only connect the 1 candle body. I'm going to extend this a little bit. We can only connect 1 candle body, and it's this down candle body. So this poor structure where you cannot connect 4 candle bodies often becomes a target for later on, for price to go back up in there and print at least 4 candle bodies. They don't have to be successive 4 candle bodies, but 4 candle bodies in that single trading session. So in this trading session, it would be US hours. Now, it's easy to find this poor structure. All you have to do is just look for the low here, and then just look as price moves down, where do I not have 4 candle bodies overlapping? So once again, this is my low, okay, and I'll just draw it from here, this low candle body to where I cannot connect 4 candle bodies. It's basically kind of the top of this one. So once again, I can only connect 1 candle body, well actually 2, this one and this one, only maybe for that, I don't know, 15 cents where they overlap. But it's only 1 candle body here and only 1 candle body there. So that is another target back to the upside. And let's see if there's any more. So yeah, there's another one. Once you train your eye, you'll see these quickly. So here you can see that the bottom of this candle body to essentially this wave 3 candle body high, it's another poor structure. I only have 1 candle body in there. Yes, here's a wick. Yes, here's another wick, but you have to be able to connect 4 candle bodies. And I'm not going to go through and look for any more because, as you know, the wave 5 happens soon after this. And there it is right down there. So let's go back to this agenda. So the ATR, whether you want to call it the average trading range for the day, whatever session you're trading, or the ADR, the average daily range for the session that you're trading. So in this particular case, if crude oil is trading, let's just say a couple dollars a day, and yes, it can trade more than that, but let's say on average it's a couple dollars a day, you'd have to go back and look at the daily chart to get what you believe is the average ATR or ADR. But for this discussion, let's just call it a couple dollars a day. So here we just call it, we open at 74.50 to keep it simple, and we come all the way down to 72.80. So that's basically that's a $2.80 move. That exceeded the $2 move, and at that point you can see that the 5-wave move was made, and you can expect some type of reversal to start filling back in these fair value gaps. I did make 2 trades in here. I will see if I can get these trades to show up. Okay, so I'm going to zoom in and show you my 2 trades. So after this wave 4, I got long at 73.18 and put in a stop at 70. I had my stop down in here. I moved my stop up to 73.04. So 73.04 was basically bottom of this candle right here, which I thought was wave 5. And so you can see I got stopped out. So I took a 14-cent loss on that contract. And then I stopped trading for a while. I had to go take care of some other things. I came back and I saw that price had bottomed here. Of course, right after I got stopped out. But that's the way trading is sometimes. And I got long on this candle. I'm still in the trade. So you see my stop down here. And you see my profit target up here. So I'll zoom out and show you. Go to the big contract. We'll come back to the micro contract. Switch us over to an hourly chart. So you can see some poor structure up in here. If I were to go further left, I can't connect 4 candle bodies in this zone. So that's why my current target is to come back up and start to retrace into this zone. So it's a big target way up there. And I've got about a 73-cent stop loss on that particular order. So once again, there's your 5 waves. There's your poor structure and shows you the candle body, under candle body, over candle body that creates the waves. And you can see a trade that I made and a trade that I'm in. Thanks for watching.